Well, hello and welcome to this webinar on relocation to Portugal. Across the course of the next 60 minutes, we're going to bring you all the information that you would require as a high net worth client relocating into Portugal. I'm joined by three experts who are going to introduce in a moment. And as always with this content, we enjoy the questions and comments of our audience and would welcome any questions or comments as we move through the session, and I'll bring them straight on to our expert contributors. So thank you for joining us today. Without further ado, I'll come to each of our panelists for a quick introduction, starting with you, Jeffrey Graham from Edge. Jeffrey.
Thank you very much, David, and thanks for the opportunity to speak today during the webinar. Thanks to everyone who's joining us. My name is Jeffrey Graham. I'm Senior Partner at Edge International Lawyers. I'm a Portuguese lawyer, an English solicitor, and also an Irish solicitor registered at Irish Law Society. I'm a dual national, and I've been therefore Brexit-proofed, and I've been living and working in Portugal for 27 years. Edge is a full-service Portuguese law firm. We look after international clients globally. We have offices in Lisbon, our HQ, the Algarve, and also in Porto. I suppose we're the pioneer law firm in residency nationality matters and assist clients with each legal step in their investment and relocation process. That will include the right to reside, real estate, tax planning, inheritance. And we also provide corporate services. I suppose amongst other things, I'm also chair of the Ireland-Portugal Business Network, honorary legal advisor to the British Ambassador, and a council member of the Portuguese UK Chamber of Commerce.
Fantastic. Well, it's great to have you with us, Jeffrey. Matthew Chrisman from Blevins Franks. Great to have you with us, Matthew. If you could provide a brief introduction as to what you do in Portugal.
Good afternoon, David. Good afternoon, everybody. David, thank you for inviting me to this webinar. So I'm Matthew Chrisman. I'm a senior partner of Blevins Franks. I manage the Cascais office just outside Lisbon. I've been in Portugal for 23 years, but I've worked as a financial planner for 31 years. My career started in London. I was in Madrid, and as I say, I've been in Lisbon and Cascais for over 20 years. So in terms of myself, like Jeffrey, I'm a dual national. I'm a Portuguese and British national. I'm a fully qualified UK financial advisor. And in terms of the company, Blevins Franks, we've been operating in Europe for over 50 years, for 51 years to be exact. We have 20 offices in 7 countries. But most important of all, we span both sides of the Brexit divide. We're licensed and regulated in the UK with the FCA, and we're licensed and regulated here in Portugal as well. So we provide that cross-border advice, and we like to call it the 4 pillars of financial planning. We give cross-border tax advice, investment advice, retirement planning advice, and also succession planning, which is passing assets through generations, that includes inheritance tax planning.
Fantastic. Well, great to have you with us. Last but not least, Sophia Baptista. Great to have you with us on the real estate front, Sophia. It'd be great to hear a quick introduction.
Hi, David. Welcome, everyone. I'm very happy to be here. What an honor. I work for Quintela Penalva. Quintela Penalva is a Lisbon-based real estate company that was founded 22 years ago. We are partners with Knight Frank, so we cover the whole territory, while whether it's through us directly or through our other partners with Knight Frank, we also cover the whole world, basically. We work with clients trying to find the best place for them to live, but not only that. We look for properties, but we also help them settle in Portugal and help them make their new lives in Portugal. So we try helping them throughout the whole process.
Fantastic. So we're going to get into the detail shortly, but first of all, I'm just going to come to each of my panelists talking about the appeal of Portugal, the Portuguese sort of proposition, if you like, and starting with you, Sophia. Just, you deal with international buyers on a daily basis. What is it that's driving demand from the buyers that you speak to who are considering Portugal? What's unique about it?
Portugal has been attracting a lot of international buyers, as you were saying, in the past years, due to different reasons, not only for tax advantages or any other kind of benefits. It attracts mainly for quality of life. Then, depending on the places they're coming from, they're looking for different advantages. But I would say we've been attracting mainly UK buyers, US buyers. Brazil has always been one of our top markets, China, and more recently, due to geopolitical circumstances, we've been getting clients from the Middle East, Lebanon, and China has always been also a very strong nationality buying. Many are looking to bring their families and to start their new lives here. Others are just looking for a place to be in Europe, to have a place in Europe where they can easily access other locations, such as as the US. But I think what really is driving people is quality of life, and I believe we'll get through it during the webinar.
Thank you. And Jeffrey, from your perspective on the immigration, on the legal perspective, we heard from Sophia, there's a lot of UK and Irish interest also in Portugal. What is it, how would you characterize what's attractive about Portugal and the regime there?
I think, yeah, I mean, I can't, suppose, set aside what, in fact, have to compliment what Sophia said about the lifestyle benefits. You know, I've seen huge change in Portugal in the 20 plus years that I've been here. So a lot very much for the better. And I think Portugal, when you look at it as a jurisdiction, hasn't just changed recently. It's changed quite dramatically in the past 10 years. Of course, that has been driven to a degree by tax benefit programs. It has been driven also by the easy accessibility of the immigration, I suppose, regime and the ability to get a residency visa. There are a whole menu of options which are available, which we'll talk a little bit about later. But it's also, I suppose, it's a sense that individuals, high net worth individuals who are willing to contribute to the economy and society are very much welcomed. In fact, just generally, people are welcomed who are coming from overseas international clients. We have the same message, which has been transmitted to us. So there are a couple of, I suppose, key points which we have to emphasize. It's in relation to fundamental rights, which are bestowed on by the fact that you're living here. Also the fact that you have the network of double taxation agreements with Portugal and worldwide with other countries. There's no restriction on foreign property ownership or foreign company or company ownership, or no restriction on residency. And I think the fact that it hosts the Web Summit demonstrates that it's becoming and has become a real startup hub and a hub for a vibrant business community. So I think, as I say, the change has been very much over a period of time, but I think it's been really inspiring for me to be part of that, in the sense that we went from, you know, financial crisis, credit crunch, bailout, to Portugal being lauded by The Economist as economy of the year. So I think that's really quite a transition over quite a short space of time, and yes, really quite inspiring.
Thank you, Jeffrey. And Matthew, from a financial planning perspective, what kind of clients do you see coming to Portugal? What motivates them about the proposition?
Yeah, I mean, that's a great question. I mean, Portugal has always been a great place to come in terms of lifestyle, obviously climate, and you know, obviously with the world-class golf courses and everything else. But in terms of a financial planning perspective, why people come here? Well, first of all, there's no wealth tax in Portugal. Other EU countries have wealth tax on their wealth every year. Portugal's had a number of tax regimes, great for pensions and other areas, and it's got a new one out, or recently new, called IFICI, known as IFICI, which is fantastic, especially for business owners, that I'm sure we'll come on to in more detail. But also, I mean, the headline rates might be high in terms of income tax and capital gains tax, but with the right planning for people looking to come here and live off pensions and investments, people can do so in terms of, you know, single-digit taxation, which is highly attractive. And then really the final one, and I'd say the biggest one, is Portugal has no inheritance tax. So for those of the people sitting in the UK and other countries with a high inheritance tax, there is no inheritance tax in Portugal. And there's a type of stamp duty on inheritance, but that's not for direct family members. So for people looking to move here, stay here long term, and leave their assets to their children, there is no inheritance tax.
Thank you. Well, we'll get into some of that detail shortly. But before we move on to the immigration side, I was just going to come back to Sophia and say, you noted the different nationalities that are deciding to come to Portugal. Does it provide community to lots of different types of people? It's not just sort of single nationalities dominating the scene. There's lots of different ways of people coming and settling and enjoying a lifestyle from different parts of the world in Portugal.
Yes,
What do you find?
yes, absolutely. People have different motivations and priorities. They vary significantly according to where they're coming from. UK buyers tend to look for second homes, easy access to England, obviously, and also the lifestyle. US clients look mainly for safety, a place to have in Europe this is the closest thing that they can be to the US. And then Lisbon is a wonderful hub if you want to travel to anywhere in Europe or even to Africa or the Middle East with several direct flights every day. Brazilians look mainly for safety. That's a nationality that mainly looks for safety, obviously quality of life, but for them, it's about a cultural place where they have strong ties to, so it's not that difficult to relocate, and it changes dramatically from what they've been living in Brazil. More recently, as I mentioned, clients coming from Lebanon, the United Arab Emirates, and anywhere else in Middle East that people need to find a safe place for them. So it attracts a lot of them. China mainly are investors. Usually people that come from China, they want to have a place where they can invest in real estate.
Fantastic. Well, we'll get into a bit more detail on that shortly, but just coming to Jeffrey on some of the key details of the immigration regime. So just looking at the entry routes, Jeffrey, for non-EU nationals, sketch us the picture. What are the options?
The options are many and manifold. There's, as I said, a whole menu of options, but I'm just going to focus on three main options, which are the Golden Visa, D7 visa, and the Digital Nomad visa, which complements the D7 visa. There are other options available so for anyone listening out there who feels that they haven't got the right visa option for them, or Portugal isn't offering the right visa option, please contact me and I'll be able to tell you that there is more to offer than I'm talking about right now. So turning first to the Golden Visa, now I suppose the principal selling point of the Golden Visa, if you like, it is a residency visa, is that despite the fact that you have to make a minimum investment, in the case of investment or venture capital funds of 500,000 euros, or a donation in arts and culture of 200,000, not pounds, euros, there are minimum stays which are quite generous. So 14 days every 2 years, and then 21 days over 3 years. Now, the reason I'm referring to 2 years and 3 years is because the initial residency card is granted for 2 years, and then the renewal is granted for 3. Benefits are unrestricted Schengen access, the ability to live in Portugal, but to choose not to, because you can tell from the minimum stays that you don't automatically become a tax resident by obtaining the Golden Visa. The restrictions are that the investments need to be maintained until at least permanent residency is obtained after 5 years. The process is online through an electronic platform, and it starts in Portugal. And the next step immediately after making the application, which will have to be assisted by a professional, would be actually to obtain the biometric appointment in order to collect that data. Then I suppose turning on to the D7 visa, which, as I say, the Digital Nomad visa is a complement of. Again, it's a residency visa. The investment requirement, minimum investment, is much lower. It's around 10 to 12,000 euros in a Portuguese bank account or deposited there. There is also a requirement to show regular passive income. Minimum stays, or what I should say is maximum absences, are a little bit different. So in any visa period, so again, it's the 2 years and 3 years, it's 8 non-consecutive months or 6 consecutive months, unless it can be shown that the absences are justified for work or health reasons. Same benefits as the Golden Visa in terms of that unrestricted access to the Schengen area and travel and the ability to live in Portugal. There is one important difference though, and that is the golden visa application can be made for families, whereas the D7 visa needs to be made individually for each applicant. And again, the difference lies also in the methodology and where the application is made. It's made actually at the local consulate or embassy, as the case may be, where the applicant is living. There are a few dotted around the UK, and or it can be through the VFS system, as it is in the UK. The procedure is 120 temporary visa is granted, and then after that, the full initial visa of 2 years is granted, normally within the 120-day period. And I'll get on a little bit later to exactly how that impacts the planning of individuals and their families. Finally, digital nomad visa, I'm going to be very quick and refer to the fact that it is almost identical to D7, save for a requirement to earn a minimum of around 3,750 euros per month. And then secondly, there's the ability to choose really a digital nomad visa in the sense it's a temporary stay visa, meaning that you can have multiple entries over a 1-year period into Portugal without necessarily becoming a tax resident. And that can be renewed on a 1-year basis. So that about covers it, David.
Yeah, thank you. And what about the tax regime? I mean, what's the tax environment like for those looking at relocation?
I think the tax, it's specifically looking at the way that Portugal has changed, and I suppose they made headline change to Portugal in terms of tax benefit programs. The NHR program was shelved. I suppose it came to its natural end. And then there's been a new program, as Matthew has already referenced, the IFICI program, or a lot of people are calling it the NHR 2.0. I hesitate simply because it's quite different from the NHR 1.0, but for the purposes of this discussion, let's just go with the flow and refer to it as NHR 2.0. I think the principal difference between that and the previous program was actually the ability to access the benefits was much easier, in the sense that there was just a requirement for residency and not having been resident in Portugal in the previous 5 years. Here, yes, those two requirements remain, but also there's an additional requirement to fulfill one of the criteria which will allow you access to the benefits of the program. Now, those criteria, the main ones we're really looking at, David, and for those out there listening, is we're looking at a professorship, and that would be in the form of a visiting professorship, for example. We're already in discussions with some of the universities in Portugal as to how we can facilitate this for some of our clients. Employer of record, which is effectively to become an employee of an already qualifying company. Startup program, normally this is Startup Portugal, either one of the incubators or accelerators, which are dotted around the country, but that's really the principal one. And the other is an export company, whereby the majority of the annual turnover is by way of export, and that can fit quite neatly into a service company option. So why are people, willing to consider this as a proposition? Because there obviously has to be some kind of pot of gold at the end of the rainbow, and that is quite importantly similar benefits to the NHR in the sense that passive income, dividends, royalties, interest from a foreign source are exempt. Pension is taxed as normal. It doesn't have the NHR 1.0 tax benefit. But salary, and that is non-resident salary, and consultancy income is also exempt, flat rate of tax for qualifying resident salary and consulting income. And finally, and here's the most interesting piece for those looking at IPOs and those looking at exits, it is the capital gains tax exemption for foreign income generated by way of capital gains. So we are already being part of, involved in discussions and plans for clients who are looking at that scenario and looking very much at Portugal as a soft landing for them after they've exited.
And what's the profile of clients that you see coming? I mean, you reference the startup scene. There is a sort of entrepreneurial energy, isn't there? And people deciding to come to Portugal. It's far from a retirement choice, isn't it? But how do you characterize the startup scene? And if people do come with business interests, what do they find in the local environment?
I think it's pretty vibrant, David, in the sense that first of all, there are lots of opportunities to invest, as I mentioned, through any of the accelerators and the incubators. I think secondly, there are a number of different agencies which you can contact in order to kind of promote your enterprise. I'd say thirdly is Portugal is receptive to foreign ideas or ideas from outside and effectively to new ideas. And that, as I said, that is demonstrated, for example, by the Web Summit and its continuation here. What I would say then in terms of the profile of the individuals, because of the nature, for example, of the NHR 2.0 program, is research and development. So, for example, business people who are looking to create a education hub for part of their business as part of their group. I'd say, secondly, innovation. Innovation is effectively enshrined and inspired by the program itself. And then thirdly, further education as well. There are lots of opportunities for that further education element and the institutions here to link up with industry and, if you like, private practice in terms of innovation, innovative ideas.
Thank you. Just to bring in Matthew and Sophia. Sophia, are you seeing some younger buyers coming through? Jeffrey's talking about more entrepreneurs coming in because there's a tax regime, there's a vibrancy, or do you in terms of people buying property, is the demographic still skewed older?
No, we see different kinds of buyers, like Jeffrey was saying, people with different motivations. Uh, a lot of digital nomads, yes, but also people for other reasons. Like I was saying previously, we see a lot of people relocating here with their families, so they tend to be much younger than a few years ago, where people would look at Portugal just as a retirement place because of the weather, of being so safe. Like the Algarve was very famous for that and still is because it's a beautiful area. But more and more we see people coming from for different reasons. So we get people from all ages, all different motivations. Yes.
Thank you. And Matthew, are you noticing that younger client coming through still perhaps accumulating savings and still like in an investment phase rather than drawing down on assets they might have saved over a working lifetime?
Yeah, definitely. I mean, when I came to Portugal in 2003, we were mostly, almost exclusively dealing with retired people because it's always been a retirement place, Portugal. I would say around about COVID, post-COVID, we saw the demographic change. A lot of people moving to Cascais and Lisbon in their 50s, early 60s, some of them still running businesses. We see it with the paddle groups out here. So before it was all golfers, and now there's lots of, and I include myself in that, middle-aged men running around playing paddle because it's obviously a younger demographic. So certainly that's the case. Yeah.
Fantastic. And Jeffrey, one thing that we should cover in our session on the immigration and the visa front is some relatively new announcements on the nationality law. Perhaps you could give us a bit of inside track on those proposals and how that might have an impact.
Certainly, David. I think the headline is the change in the residency requirement or the citizen requirement, I should say, from 5 years to 10 years. Now, that's the headline. Effectively, this was I suppose, a political motivation, and like any political motivation, political motivations can swing. Second thing to say is the law has not yet been published, although it has received presidential approval, and the regulation has not yet been published, which accompanies the law. That will be published within 90 days of the publication of the law, meaning that there's lots of space to be filled out around that headline. What effectively we're advising clients at the moment, and this is particularly relevant for those who are worried about grandfathering, is that provided the application has been made prior to the law coming into force, in fact, there was a big splash about this in the foreign press here yesterday, then it will still apply the old rules and be grandfathered under that regime of 5 years. I think the second thing to say is that, yes, there are differences with the new law. There is going to be a civic test in the sense that recognizing Portuguese symbols, for example, being able to speak Portuguese is to the same level as before, but actually being able to be au fait with Portuguese culture and elements of it. Then I think the other important thing to say is that there is room to maneuver, because one of the changes that was made, and here I flip back to the regulating of the law itself, is that the clock, or the citizenship clock, starts ticking with the new law from the date of the issue of the first residency card. Previously, it was from the date of the application. Now, there may be some room to maneuver within this space when the regulation is published. We shall see, and that's certainly our hope. And then I think the most important thing to emphasize at this stage is that this is a change to the citizenship law. It's not a change to the residency law. So meaning that all those programs I previously talked about, the Golden Visa, the D7, the Digital Nomad, they remain intact and the same as they were. And I'd probably say that perhaps now, in terms of what our clients are looking at and what perspective, I suppose, relocators to Portugal would be looking at, is maybe nationality as a two-step process. 5 years permanent residency, 10 years nationality.
Okay, thank you. And finally, Jeffrey, on if relocators buy property, that's another kind of like legal aspect that they might consider. How easy is it to get a property transaction completed? I'll come to Sophia as well for her view in a sec. But what's the conveyancing kind of environment like?
It's pretty transparent, David. I think there with a few differences. UK buyers in particular will not be surprised to hear that it's got 3 main stages: pre-contractual, contractual, and then completion closing. The pre-contractual, you would expect the offer acceptance, which is quite informal actually. Sometimes for higher value properties or bigger transactions, you'd be looking at a kind of exchange of binding and non-binding offers. I think elements which are important for investors and property buyers to note is there is requirement for a non-resident Portuguese tax number. Normally, it's important to give a power of attorney to your advisors, your lawyers specifically, with a view to being able to facilitate the transaction, given that a lot of our clients, for example, are non-resident at the time. And then there's also a requirement to open the bank account, which I'll come on to a little bit later if I have time, because that in itself is something that needs to be factored in. Contractual, there's a promissory contract of purchase and sale, the equivalent of the contract as UK buyers and Irish buyers and buyers in other jurisdictions in the US would understand. That is normally signed presentially. So we don't have the same, I suppose, ability to maneuver as in other jurisdictions where you can do it over the telephone. Deposit would be between 10 to 20%. There would be penalties for breach for the buyer losing their deposit, for the seller having to return the deposit in double. Usual, and actually it's become a little bit more, inverted commas, fashionable to insert warranties and reps into the contract itself. Closing is a little bit more involved in the sense that it involves a notarial deed. And in that notarial deed, again, there's a requirement to presentially appear. In our case, we appear on behalf of the buyer or seller. There's a requirement to pay property taxes, stamp duty, loosely equivalent to IMT, which is a top rate of 7.5% over about 1 million or so. There is the notarial deed is a physical document, but it's not original. That stays with the notary themselves. What the buyer or the seller will obtain is a certified copy, and then registration is left with the notary, and that can take a little bit of time. So I think the key points and maybe the things to distinguish the process are the deposit is not paid to the seller as a stakeholder. Very, very important. Although escrows can be entered into, there are no standard form contracts, so you might have to pay a little bit more for legal fees. The payment is by banker's draft on the final deed normally. And there's also a very loose KYC AML at the deed itself, which we have to undergo anyway as professionals, or the client has to. And finally, pre-contractual bargain, an evolving area of law whereby it can be, I suppose, there can be obligations which arise from pre-contractual arrangements which were made prior to signing of the contract.
Thank you. I mean, Sophia, what's your advice for relocators looking at buying property as to how the transaction can take place smoothly?
I would say that Portugal's purchase is a relatively straightforward process. Like Jeff was explaining, it has some steps that people need to watch out for. But I would say for international buyers, it's mandatory to be well supported by the right professionals from the beginning. And always have in mind that real estate agents cannot advise them in relation to tax or any legal matter. We are just real estate advisors. But one other thing that they should keep in mind always is that in Portugal, individuals are not licensed. The real estate agents are not licensed. This is a huge difference for the US, for example, for other countries also, but for the US, this happens a lot. People get in touch with someone that they meet and they try selling them or showing them properties that are beautiful, but those people are not licensed. And sometimes they don't know how to, or they think they shouldn't advise the clients to have a lawyer to help them throughout the process. So a lawyer is absolutely mandatory. If they have, if they need a wealth advisement, it's absolutely mandatory. We're here to help them find the property they are looking for, but they should be well advised on that and choose a company that they can trust, not just some agent that they meet through some friend or whatever. This is a very important thing. Choose a reputable company that they can trust, because this could make a difference in the process, and be well advised, obviously.
Absolutely. No, sound advice. Thank you for that. And Matthew, just looking at some of the financial planning aspects, I mean, looking at some of the headline rates, like with many European countries, Portugal doesn't necessarily look that tax efficient, but how do you see it in practice? And what's the value of proper advice in people coming to make sure they're as efficient as possible?
Yeah, I mean, to take the second part of the question, proper advice, proper planning. My advice is for anyone, before you leave the country of where you're living, take advice and do your planning. I mean, to give an example with UK nationals, because we do a lot of planning with UK nationals before leaving the UK, it's looking at the assets you have and making sure that you leave no stone unturned. For example, pension commencement lump sums, should you take them before leaving the UK? With your ISAs there, would they work in Portugal? Should you sell them before you leave? These are all examples of the proper planning before you leave. And also, I mean, we provide what we call a Moving to Portugal strategic financial planning, where people actually understand the tax rates before leaving, because you don't want to just arrive and then either get a nasty shock, or you can get a good surprise in many times, but it's having everything lined up with all the knowledge before you leave, okay? And really then, I mean, what in terms of what does Portugal look like? I mean, the headline rates are quite high. You've got income taxes all the way up to 48%. If you're not part of any of these tax regimes, and capital gains tax and dividend taxes at 28%. But with the right planning, with both pensions and investments, you can get that to below 10%, drawing down on that, which is, if you compare that to some of the European neighbours, it's highly tax efficient. A lot of the work I do as well is we do cash flow modelling, which is to look at people's assets, the tax burden on it, but also is how long that money will last. Will that money last in terms of meeting the lifestyle in Portugal? What people need return on those investments to meet those living costs. That is part of the planning, and not just coming to Portugal in a sense blind and trying to work it out. There's a big difference there.
Thank you. And just focusing in on the pension aspect, particularly for, say, UK clients who've managed to amass a substantial pension, what are some of the key considerations? I mean, you mentioned tax-free cash, which is obviously a big one, but what does it look like when they are retired in Portugal and drawing down on that pension, how do you kind of look at what they've got and what they should do with that pension?
Well, I mean, first of all, there was a big change. October 2024, the UK budget. It's a big change around pensions because up until that budget, pensions didn't form part of your estate for inheritance tax purposes. So everything else did upon death. They added up your estate upon death, and pensions were exempt from that. But from April next year, pensions will form part of your estate for inheritance tax purposes. So that changes the advice completely because in the past, people moving to Portugal, keeping the money in an inheritance tax protected net was always a good thing. Okay. Now, the advice has changed because if from April next year they form part of your estate, the advice with pensions changes and it really looks at should people still be leaving the pensions in the UK, and with some of the inheritance tax changes that I can come on to, in many cases the answer is no. But how we do that is, at Blevins Franks, we write to the schemes, we work out people's contribution history, we work out then the most tax efficient way of drawing down from those pensions in Portugal, and also creating the right succession plan on that as well. So everyone's situation is different. A lot of people have a lot of different pension pots as well. So it's do people want to amalgamate that and consolidate those pensions? And what's the best way to draw it down? And also, if people have other assets, if they have property they might sell, other investments, what part of their retirement should they be drawing down from the pensions to make it most tax efficient? So that's the planning.
Is transferring the pension overseas still part of what people consider, or has that been made less attractive in recent years? How do you see whether people should move the pension from outside the UK or leave where it is?
Yeah, I mean, that's. I'm glad you touched on that. So look, the two separate things. One is transferring them to an overseas scheme, and another way is encashing them and turning it into cash and reinvesting it. Transferring them to these EU SIPs, which we used to call QROPs, qualifying recognised overseas pension schemes. Unfortunately, this famous October 2024 budget attacked those schemes and said that basically, if you move to an overseas QROPs, then there's an overseas pension transfer charge of 25%. So for most people, that's a harsh levy on moving the pensions overseas. So with most of the planning we're doing, then it's more looking for a drawdown and encashment, because 25% is actually better than the 40% of inheritance tax upon death, the 25%. But really, if that can be avoided, then clearly that's the way forward.
And what about in terms of the cash flow modelling and cost of living? I mean, do people find retirement in Portugal, like just generally to achieve a lifestyle they want, it's affordable, or costs are rising everywhere? How do you, when you're mapping things out, do people look at it and think, actually, yeah, I can live here tax efficiently, and actually general cost of living provides me a nicer lifestyle than what I would get in the UK or elsewhere?
Yeah, I mean, with the cash flow modelling, then of course you have to build in the inflation and where we see inflation going. And at the moment, of course, it's a little bit more elevated. But look, it depends where you move to in Portugal. I mean, I'm in our Cascais office at the moment, and I live in central Lisbon. They're expensive places to buy property, but of course, Portugal's got a lot of places in Portugal that are still very, very reasonable compared to, I'm sure, people in the US and parts of the UK that people are tuning in from. But look, I mean, other areas such as food and restaurants is generally lower than the UK, yes. So, but yes, we build that in with the cash flow modelling, of course.
And just looking at outside of the pension assets for other investments, offshore bonds, insurance wrappers, popular tools, what are the kind of vehicles that people use for savings for tax efficiency?
I mean, Portugal have their own, so for the people in the UK, they have their own versions of ISAs, which are capital gains tax shelters around investments. So they offer those. The interesting fact about them is these type of capital gains tax shelters is you get the gross roll-up of income and gains that you would with a UK tax wrapper, in the sense of all the investments growing inside the wrapper grow tax-free, but there's no maximum, which is fantastic because, of course, for UK ISAs, it's only a certain amount every year. But when you draw down, you do pay some tax, but this tax is once again single digit, so it's less than 10% on the withdrawals.
And you mentioned on the top, Portugal has no inheritance tax, but clients, say, coming from the UK might have a liability back there. How do you, when you're looking at estate tax liabilities generally and exposures, what are you seeing?
Oh, well, David, that's changed again. So domicile was the word that we were using for years. So for many people, understanding the fact of domicility that you got from birth, normally from your father, that UK inheritance tax was always around your domicility. If you were domiciled in the UK, you were taxed on your worldwide estate. Now they've changed it. They've changed that. Now it's to do with the long-term residency rules. Okay, so if you're a long-term resident in the UK, upon death, your worldwide estate is taxed at 40% above your nil rate band, which is pretty hefty. Okay, Portugal has no inheritance tax, but of course, the idea is the planning around it is for people moving to the UK is breaking or in a sense the inheritance tax net from your home country. So for US nationals and other EU nationals on this webinar, if you can, in a sense, free yourself from the chains of the inheritance tax from your home country, then it's about planning in Portugal because of the succession planning. And look, inheritance tax is one side of it, David, but the other side of it is the succession rules. Because Portugal, succession rules are different in Portugal. It's under the Napoleonic Code. The UK is the Civil Code. So you can't just freely dispose of your assets unless you have the right planning. Once again, I mean, this side is Jeffrey deals with a lot of this in terms of wills, but definitely a word of advice is that take advice with the whole succession planning because there are different heirship rules in Portugal.
Jeffrey, I mean, just a quick comment on that. Getting a fresh will in place when you're moving jurisdiction is sound advice typically, isn't it? What do you see in this area on that succession point?
Yeah, eminently sensible in terms of your planning, both for your family and also from tax perspective. So a will can be executed in Portugal. A separate will, we normally recommend separate will dealing only with Portuguese assets. And in that you can choose, or the testator can choose, their law of nationality. In the case of most, if not all UK nationals, that will enable them to freely dispose of their assets by will, thus having control. This becomes particularly relevant whereby, for example, there may be more than one marriage, and also where in fact the preference would be for the spouse to inherit and manage the estate moving forward. So eminently sensible to execute the will. It is a little bit different again in Portugal from the UK in the sense it is a notarial process as well, meaning that there is a bit of extra planning which is required, and actually the requirement for the testator to appear presentially before the notary.
Okay, thank you. And Sophia, just to look at the property market, your firm covers Lisbon, Porto, Cascais, Comporta, Algarve, many areas. Could you just give us a description of different characteristics of these sub-markets?
Okay, they are all very different, in fact. So looking at Lisbon, I would say that people are looking for a more cosmopolitan way of living. Probably they have to be working every day, so they want to be close to work, not have to commute every day for very long distances. They have a more cultural and vibrant life in that way. They have great restaurants. It's a very, very safe city, and walkability is one of the advantages, and they can have beautiful prime apartments, and obviously it's a very mature real estate market. Looking at Cascais, it's extremely popular for families. It has several international schools in Cascais, also lots of golf courses. It's close to the beach, so it's more of a lifestyle decision, I would say, and its proximity to Lisbon at the same time allows people to take advantage of the best in Lisbon, but living in Cascais because it's only a 30-minute drive, so it's that close. Comporta, it's a different market. It's what we call a quiet luxury. It's not a very developed area. It has beautiful new developments coming up. It's on the beach, one of the best beaches in Europe and the longest one in Europe. It has great restaurants, but it's very private. So if people want to have a private, quiet life, I would say Comporta and the luxury one. But people look at privacy in that area. Porto continues to attract a lot of international buyers because of its strong character, architecture, very traditional, close to the Douro River and the wine vineyards in Porto. Um, it's a beautiful city, smaller than Lisbon, but very cosmopolitan at the same time. It attracts a lot of buyers, and it's also more affordable than Lisbon, so it has that other advantage. Through Knight Frank, we also cover the whole Algarve. Algarve is still attracting buyers that want to retire mainly. Also digital nomads, but probably, and this obviously is not doesn't apply to everybody, but maybe digital nomads are younger people, so not all of them look at the Algarve because Algarve can be very busy and very vibrant in the summer, but not a lot happening during the winter. So some people rather live in the city. So I would say the Algarve still attracts people that are looking for a quieter way of life, retirement probably.
So just looking at Lisbon and the supply of property, what do high net worth relocators find in terms of stock available? Do people buy and redevelop older properties because they can't find what they need, or what's the typical experience, or what's the current state of supply?
Uh, Lisbon has a very short supply. Lisbon is a small city. It's our biggest city, but it's a small city for international standards. So supply is low. What's been happening is the city has been growing. What we used to call the city center that attracted a lot of people, and it still does, which is the premium market, Chiado, Avenida da Liberdade, Príncipe Real, Lapa, those are the main areas that attract international buyers that are looking for the top properties. But Lisbon has been growing, and especially we have been learning with the buyers, especially from buyers that come from bigger countries. Well, almost all countries are bigger than Portugal, but imagine a buyer coming from the US or from Brazil. When we explain to them that we are selling them a property that it's not in Lisbon, but it's a 30-minute drive from Lisbon, I would say it sounds far. But for an American, it's just okay. But if it's a 30 minutes, it's just right over there. And so what's been happening is people are looking at other alternatives, either south of Lisbon, areas like Setúbal, or Setúbal, which is for the ones that don't know Portugal that well. Setúbal is 40 minutes, maybe half an hour to 40 minutes drive south of Lisbon. And it's also on the coast, and it's before you reach Comporta, and it's 15 minutes to Comporta. Or you can go north of Lisbon and look at areas like Ericeira or Sintra, which are beautiful on the coast. And same thing, half an hour to Lisbon, half an hour to the international airport. So we tend of offering people other alternatives so that they don't have to stick to Lisbon, especially when they don't have to come every day to work in Lisbon. It doesn't make sense to try to relocate to the city center, and then although it has a lot of advantages, it's a different way of life, much more busy, more expensive, like Matt was saying, and you have all the problems of the big cities, although you're close to the city center, but you have the problems of the big cities. So we advise people to move away from the city center, have great alternatives, just a half an hour from the city center, half the price from the city center.
And what's the kind of timeline for purchase? I mean, if people are coming from the States or Brazil, they presumably come to Lisbon to look before they make a move. They come and do some research. What do you find people
Yes,
tend to do?
yes. Well, it happens to us a lot that people come and they have that idea that, well, I'll be looking for 6 months, then I want to rent, and then I want to experience some areas, and then they fall in love with a property and they just buy. And this happens a lot, which obviously makes us very proud, and we understand because you're planning on looking at some property by the ocean, but you're not sure if you want to be by the ocean. And then you see a beautiful property by the ocean, and it's a beautiful day, and you just realize that that's where you want to live, and so you make a move. But I would say in general, people take probably 2 to 3 months to find what they're looking for. People like to plan in advance, and they should. Before coming, we should know exactly what they have in mind, what they're looking for. First, because probably we will have to explain that some of the things they're looking for are not available. Just to give you a quick example, in Lisbon, we have many traditional buildings that are beautiful, beautiful, beautiful architecture that has been renewed, and so it looks beautiful, but it doesn't have a parking space. It's an old building, it has no garage, and people need to deal with the circumstances of the city. So before they come, we like to help them understand exactly what they'll be able to afford with their budgets, exactly what they can expect to find in properties in Lisbon. Imagine for an American, we must explain to them that if they are looking for a building that is from the beginning of the 19th century, it doesn't have air conditioning. You have to install it. You may be able to do it or not. Same thing with the elevator. And for instance, for French, this is not a problem, not having an elevator. They don't mind. But we have to understand prior to them coming to Portugal so that we can prepare, and we'll show them exactly what they're looking for. We don't make them waste time. We want them to make a wise decision, and in order to do so, they must prepare in advance.
You mentioned schooling before. It's obviously crucial for people moving with
Yes.
school-age children, and international relocators might want the kids to go into a specific international school. Are there places available? Can people start multiple times of year? What's the
Yes.
practicalities of
Yes.
that?
It's relatively flexible, but it's something that people should consider as soon as possible because we have a lot of demands. So although we have several international schools, I believe that now we have 28 international schools in Portugal. So imagine the country is not very big. We have 28 international schools. People like to have an international school because they believe that this is the easiest way for kids to adjust. And I understand. Usually they speak English, so coming to Portugal and having to learn Portuguese in just 2 or 3 months, it can be complicated. But to tell you the truth, kids adjust in 2 or 3 months, even to Portuguese schools. We've seen it. People coming in June to Portugal and kids starting school in September and going to Portuguese schools, which is unbelievable. I don't think we would be able to do it, but they are, and it's incredible. But although I understand having an international school, that to have the chance of having an international school is very important, and there are several available in Portugal.
Thank you. We're just coming towards the end of the conversation here, but Jeffrey, there could be a perception that there's a bureaucracy in Portugal which makes it difficult for you in terms of your lifestyle or running a business. But as someone who's lived there a long time, what's your take on the environment from either like a lifestyle and or business perspective?
Yeah, I think it has to be contextualized a little bit, David. And I would say probably first of all through the lens of the simplex regime, which has, as the name suggests, made things a lot simpler because a lot of the certain platforms has been digitalized for in relation to in the corporate area, the company and corporate, in relation to the land registry as well, even in relation to immigration. So that really has improved efficiency, no end. However, we have to recognize that underlying that, there are also local land registries, local immigration offices, local commercial registries, which are necessarily have their own restrictions in terms of personnel. The current government is trying to address that and have invested more in the immigration agency, IMA. So I think the way we look at it I'm always a great believer, and I think both Sophia and Matthew have said this on more than once, is taking the right advice. And effectively, if you take the right advice, my big the thing that I object to is when individuals who come to Portugal for the first time, they're looking here to move, they maybe find that school, they've maybe found that property, they've kind of got a pathway about how they're going to run their business whilst they're here, and then they effectively meet the wrong professional, if you like, wrong inverted commas, from whom they don't get the right 360-degree advice. As a result, their first impression is negative, and they don't come back. And I think that ultimately, for most individuals looking at Portugal as a relocation destination, they have that, I think, 360-degree approach themselves. So they are already thinking, and this is where we can assist as well, and the likes of Matthew and Sophia, is effectively in relation to the planning, exit, as Matthew has talked about, an entrance into the Portuguese tax regime, alignment of when your first residency card is going to be granted, so that you can arrange your travel plans, whether that be for business or indeed for family. And also fix your corporate launch date. For example, if you're going to have, an announcement about opening your subsidiary in Portugal, then you want to be able to announce that with some definition. So I think that if there's a bit of visibility, and I've done this with clients, where we draw out on a piece of paper, effectively various timelines for various things and how they coordinate. So I would say that that is really something that has to be planned. But on the flip side, I would say equally, the thing I didn't mention was, the number now of investor WhatsApp groups, the number of events you can attend, of hubs you can go to, for example, the Unicorn Factory, which is the hub for startups, in order to meet people, or like-minded people. It's really incredible. So I'm still, through the network, I'm still meeting a vast variety of people, young investors who are entrepreneurial in their nature, some who are later in their investment career. It's not their first rodeo, so to speak. And all of them are speaking positively about, I suppose, Portugal as a business environment. I just think that initial step, there has to be some understanding that there's an understanding that you are a non-resident, you're a non-national. All of this is unfamiliar to you, and therefore you need the right professionals in order to guide you through that. And the same would be if you had a Portuguese who was looking to relocate to the UK, for example. It'd be the same pathway.
Thank you. And Matthew, as we come in to close on this session, what's your top tip for relocators out there looking at Portugal? I mean, we've had some sound advice across the course of this hour, but is there anything salient you want to add?
I mean, well, not to repeat myself and repeat Jeffrey, sound planning is the most important thing. But I mean, a top tip, I mean, look, I've lived in Portugal a very long time. It's such a fantastic place to move to. It's always been voted high up there in terms of Global Peace Index, in terms of safety and everything else. Climate, I think Lisbon is the capital city with the second most sunshine in the European Union, behind Valletta. Yeah, it's just a wonderful place to bring up children. I brought up children here. It really is. It ticks so many boxes in terms of work, lifestyle balance and everything else. And yes, with the right planning, people can really reach their retirement dreams. So yeah.
Thank you. And Sophia, from you, what's your top tip as we close for those starting to research the property market or look into the Portuguese?
Sorry, but I'll have to say the same as everyone else. It's very, very important that you choose the right professionals if you're looking on making such an important move, really important. And then when you feel that you found a place that you would like to settle, experience the area. That's very important. Try to understand the life that you would be living if you own the property in that specific neighborhoods. And another thing that is very important, Jeffrey mentioned the communities of expats. He didn't say it exactly this way, but there are huge communities of expats. People are not left alone. I would say also that Portugal is a very welcoming country, and English is widely spoken. That's not the barrier. English is widely spoken. Anywhere people go, they will find, if they want to ask for a coffee, everybody will understand. At the supermarket or wherever they're going, they'll be able to speak in English and people will understand them.
Fantastic. Well, look, thank you for joining us this afternoon. Do reach out to these experts on this call if they can help you with your relocation and get that important right advice that has been the thread of this